Good afternoon and good afternoon again, ladies and gentlemen. First of all, my humble apologies for the late start. We were having some technical issues with our internet. I want to welcome you once again to the series of lessons and modules on VAT education for the entire month of April. Again, my name is Beaumont Todd. I am the Training and Communications Manager here at the Department of Inland Revenue. So I want to welcome you to today's session. Today we are on module 3, which most likely we're only going to take today to actually complete, which is talking about invoices format, VAT invoices. So before we get started, I just want to open with a quick word of prayer. Father God, we thank you for your grace and mercy, O God. We thank you for the work that is being done. We thank you for the information that will be shared. We pray, O God, that you go before us and help everything to be done in decency in order by your grace. Guide us and keep us by your grace, O God. In Jesus' name I pray. Amen. All right. So we are streaming to YouTube as well. So just want to do a couple of housekeeping matters again. Always want to remind persons of a few things. The first one of it is we are doing these in modules, about 7 to 8 different modules over the course of the month. Most modules will take anywhere from 1 to 2 days. It's rare that'll take 3 days for module. The time usually will be anywhere from an hour to 2.5 hours, and that really depends on how in-depth we need to get into a particular topic. We're breaking it down like this because we don't want to rush through the information. We want persons to get the information. At the end of each module, what you will actually be sent is a link with the PDFs from the previous modules, as well as a quiz at the end of each module. If you are interested, the quiz is not mandatory, but if you are interested and you do complete all of the quizzes with a 70%, you'll get a certificate at the end. Just want to encourage persons to go through the process of doing so. But at the same time, we ask you to drop any of your questions either into the Zoom or the YouTube link for today. Again, we apologize about the late start, so let's just get into it real quick. Go. All right, just want to make sure everyone can see all of this. All right. Is it showing clearly inside the room? Okay. All right. Inside the room. Okay, good. So again, we will be going through these modules until the end of April, probably leading until about the first week of May. Right now, we're on module 3, understanding VAT invoices. So our objectives for today is, first of all, to define what a VAT invoice is, identify the required components of a VAT invoice and distinguish between VAT invoice, recognize and correct invoice errors, analyze real-world invoice examples, and apply knowledge to business practices. So what is a VAT invoice? Most of us, when we go into businesses and stores, as long as the business is actually charging VAT, we receive a receipt from it. And sometimes we think that a VAT invoice and a VAT receipt are the same things, but they actually are not. So what is a VAT invoice? A document issued by a VAT registrant showing a taxable supply or service and VAT charge. It acts as proof for input VAT credits and compliance. And I want to go through this as thoroughly as possible to show that at the end of the day, you cannot use a VAT receipt for a VAT invoice when it comes to actually claiming your inputs if you're also a business that's registered for VAT. All right. I don't know what it is that's fighting against us getting this information out to you, the public, but regardless of what, we're going to make sure keep going. So the question is, who can legally issue a VAT invoice? And the answer to that is only, and see, I wanted to make sure I put this in red. Only a VAT registered business can issue them, no one else. If you are doing business with anyone and that person at the end of the day is charging you VAT and they are not registered with us, they are participating in an illegal act. And you also, unfortunately, are also knowingly or unknowingly participating in an illegal act. So we encourage you, anytime you do business with any business, any store, doesn't matter how big, how small, if they are charging VAT, you need to ensure that they are a VAT registered business. So what can you do to make sure that they are VAT registered? So first of all, why are VAT invoices important? VAT invoices are important for the taxpayer and the people that do business with them, because the taxpayer should ensure that they receive a VAT invoice when they make a purchase from another VAT registrant. This is especially important to businesses that at the end of the day are actually VAT registrants and need to be able to claim inputs. They may be able to claim the tax from their suppliers that charge them on goods and services for their business, but this is only if they keep all of their VAT invoices received. Someone asked me the other day about them having to have their receipts. So the answer to that question would always be, if you're looking at the end of the day to claim any type of input on your VAT, you have to make sure that you do have the receipts that enable you to do so. Otherwise, you won't be able to do so. So the importance of the VAT receipt again, one, it acts as a, and let me say it again, a legal evidence of VAT being charged or collected. This is why it's also important when you actually do business or you go into a business associate to make sure that if they are charging you VAT, that they are registered. For every VAT invoice and VAT receipt that you are actually given as you're purchasing supplies or goods, that acts as legal evidence that this person is registered to do VAT. It also acts as legal evidence between business that both registrants that are acting in this participate are actually legally registered VAT registrants. And three, it makes it eligible for the person to claim input VAT. You cannot claim input VAT from somebody who is not registered for VAT. And you cannot claim input VAT for a business that doesn't issue you a VAT invoice. So if you have a supplier that's not a VAT registrant, that cannot be included as a part of your expenses when you go back to file for your input. If you put in that receipt, that's legal. It can only be a receipt that's coming from another VAT registrant and a VAT invoice. And this is why we're going through this, because we need you to understand the difference between a receipt, even a VAT receipt, and a VAT invoice, because the two are not the same. So for a business that's not a VAT registrant, they can't even issue you a VAT, I would say, a VAT receipt. They can only issue a regular receipt because they shouldn't have VAT on that receipt in any shape and form, whether it's inclusive or exclusive. Inclusive meaning it's already included in the price. Exclusive meaning at the end of the day, it's actually shown on the receipt to show you the difference. So again, the four main purposes of the VAT invoice is as a notice that the supplier is charging tax and VAT. It's a notice of transaction between two businesses that are both registrants and how much tax is being charged. It's a reference for cross-checking which one of the main features of the VAT credit method of a value-added tax system. And more importantly, it's a principal evidence that supports a registrant's ability to claim the deduction of input tax. And see, I put this in big red. Let me say it, and I put it in big red. You cannot claim VAT input without a VAT invoice. You cannot use a regular receipt from a business that's not a VAT registrant, and you cannot use a VAT receipt. And I'm talking about VAT receipt because we're going to also go over that today. You can only use a VAT invoice when you are claiming inputs. For the last two modules, we're just talking about the VAT invoice. We're talking about being charged VAT. But now today, specifically, we're going into the details of the VAT invoice, why it makes a difference for a business that's registered for VAT, and why it makes a difference for a business when it comes to claiming VAT. Now, if you are a business that operates under the flat rate, whereas you don't claim inputs, well, this may not matter to you. But the majority of businesses operate under the standard 10%, and they have to be in a position where they can claim both for their output and their input VAT. So who should issue a VAT invoice? A VAT invoice can only be issued by a person who is registered for VAT. I'm going to be repeating this a couple times today because I need this to stick with persons. If you go into a business establishment and you are being charged VAT, and they do not have proof that they are a registered VAT registrant with the Department of Inland Revenue, you are not required to pay that business VAT. If they come back later and say to you, well, I'm registered, that's on them, but there is certain proof that they have to show that they are registered for VAT. Whenever a registrant sells goods or services to another VAT registrant, he needs to give that person a VAT invoice showing the amount of tax charge and other information pertinent to the supply being made. Now, let me say here as well, if you go into a business and they give you a VAT invoice at the end of the day, but you're not a VAT registrant, that is also fine. That doesn't affect you doing business with them if they only give VAT invoices and not VAT receipts. However, because you're not a VAT registrant, that wouldn't affect you when it comes to you being able to do any input VAT because you're not a VAT registrant. So however they decide inside their business, whether they do just receipts or whether they do invoices, it's on that business. But you, at the end of the day, also have to make sure if you're a VAT registrant that you are getting those VAT invoices because it's important and pertinent to your business. So, and now I put this in red for the same reason. Not just who can legally issue a VAT invoice. Again, and I keep saying this throughout this whole presentation, only VAT registered businesses can issue them. I encourage persons, if you're not certain whether a business is legally, and let me say legally, because sometimes, and let's be honest about this, some persons make up their own certificate at the end of the day. Some persons make up their own business license at the end of the day. So this is why we're doing these educational sessions, because we want you both as a business and as a consumer at the end of the day to be protected and to be treated fairly. If you go into an establishment and you ain't certain, even if they have it up, you still have the right to contact us to make sure that that business is properly registered. Plus, we have onto our website, if you go under the VAT tab, you'll see that we have a list of VAT registered businesses and TIN-only businesses. We discussed those two inside module 2, the difference between a VAT registered business and a TIN-only registered business, so that if you're doing business with them, you know the difference. A TIN-only business cannot charge you VAT and cannot claim input. That is for special cases in certain instances. But the regular VAT registered businesses, and that list, like I said, is constantly being updated for you to be able to see who exactly is registered for VAT. So who can legally issue a VAT invoice? One is issued by registered VAT businesses. It is mandatory when a registrant sells to another registrant or a refund eligible entity, example, diplomats or charities, that they provide a VAT invoice. And 2, 3, it's not required for cash transactions under $50 unless requested. So we talked about this yesterday, and this also applies to you being able to charge VAT. So your VAT certificate must be displayed in order for you to charge VAT. So if you go into an establishment and you do not see the VAT certificate, and they cannot produce the VAT certificate, but first of all, you shouldn't even have to ask. It should already be displayed somewhere that you can easily see it when you walk into that location. If you cannot see it and they're charging you VAT, you can tell them very plainly, I can't pay this, and you don't have a right to charge me because you don't have a certificate displayed. And why is that a problem? Because only a business that has a VAT certificate can charge VAT or distribute a VAT invoice or VAT receipt. And these are the penalty as to why you have to have it displayed. And I may repeat this again. In this time, I also included the link where you can actually go online to see exactly what the fines and actual penalties are for various things. pertaining to VAT, VAT invoices, being charged for VAT, charging persons for VAT without having a VAT invoice. So you can be fined up to $50,000 or up to 12 months imprisonment for simply not displaying your VAT certificate. That's how serious a penalty it is at the end of the day. So if you do happen to go into an establishment and they don't have a VAT certificate displayed and they are charging VAT, I know we have this thing inside this country where we say snitches get ditches, but I have another statement to add to that. Hey, you snitches only get ditches if you're willing at the end of the day to let them affect your riches. That's the last piece I could throw into that. The question is, when you rebill utilities to tenants for their share of utilities, is that input or output VAT invoice for the entity issuing the invoice? I'll take that question offline. The reason being, I want to verify when it comes to tenants and when it comes to rentals, how the VAT is actually managed in that. So I won't give you the wrong information. What I'd ask you to do is you can email dir_comms@bahamas.gov.bs, and we'll make sure I'll get that answer back to you in due time and swiftly. I don't want to give you the wrong information on it. Okay. So who should issue a VAT invoice? Of course, only those that are registered. And here's another fine and penalty: an unregistered taxable that issues a VAT invoice. See, it's not now just about having your certificate displayed. If you are unregistered and you are not a VAT registered person and you issue a VAT invoice, tax receipt, tax credit note, or debit note to a person, you are liable for a fine up to $250,000 or imprisonment or both. So I want this to settle in today because, see, we take this very serious when it comes to persons not just charging VAT, because when they charge it and they don't hand it to the government, they're already robbing both the government and the people. And at the same time, they're robbing the consumer and other businesses that are operating in a fair manner. So invoices, VAT invoices, should have a number of these things: the VAT invoice heading, a business name and TIN, the date and invoice number, description of the goods and services, the VAT amount charged, and the total amount, including the VAT. This is just an example of how the receipt can look, depending on the business you do business with. Of course, it can look different for different businesses, but the main thing is the information that is required does not change. So every valid VAT invoice must include the following. Again, the term VAT invoice, the supplier's TIN, name and address, the invoice number, the buyer's TIN, name and address, the date of the invoice, the date of supply, if different from the actual date of the invoice, description, the quantity and the unit, clear tax code. For example, now, because we have both the 10% and the 5%, when you look at a VAT invoice, you need to be able to see the differentiation between the two, as well as sometimes persons also have zero-rated items on the invoice that you charge. So you also need that to be displayed. So when you go at the end of the day to put in for your VAT filing, which we'll be dealing with in the next module, you need to make sure you know what is a zero-rated item. You need to make sure you know what is a 10% and the standard rated item. And you need also to know at the end of the day what is a 5% item. Then, of course, discounts, if any, the total before the VAT rate and the VAT amount, and the total amount payable. All right, so let's just look at it quick. So looking at the receipt, you'll see that to the top, it would have the VAT invoice, indicating that this is actually a VAT invoice and not a VAT receipt. Now, I am trying to stress that. I need you to understand. If you are doing business with another business, you need to make sure what they are providing you is a VAT invoice and not a VAT receipt. And we'll talk about that in a minute, why that's actually important. So, of course, you have your supplier's name, their TIN. You have the customer's name, their TIN. A couple of my lines missing. Let me stick to these. All right. There we go. All right. So the customer's TIN, the customer's name, the customer's address, the unique invoice number, the date, the description of goods, the unit price of the goods or services, excluding VAT, the total VAT rate and the amount, and the total VAT amount, including VAT. You need to have this information on your invoices, even if the invoices look differently. All of this information is important at the end of the day to make sure that what you're actually receiving from the person is a VAT invoice. Because if one of those items are particularly missing at the end of the day, please note, if any of these are missing, the document may be treated as a VAT receipt and not valid for claiming input credit. So all of that information, when you receive an invoice from your clients or whoever you do business with, you don't want to just glaze over it and say, okay, yeah, this is an invoice. No, you want to make sure that those particular details are correct. Like we mentioned yesterday, even with the registration process, check and make sure that the name they have on the invoice is correct. Make sure that your TIN is correct. Their TIN is correct. Because then if you have to use that to validate that this is also a legally registered business, if they have an incorrect TIN on it, and that may be the one time you do business with them, then that would put you out of loss. So you want to make sure all of that information is correct and legal for your own safety at the end of the day when you're doing business with persons. So let's talk a little bit about VAT invoice versus VAT sales receipt. So what is a VAT receipt? A VAT receipt is for consumers, small businesses who are not VAT registered, cash or over-the-counter transactions, and it's a simpler record of sale not usable for claiming VAT. So say, for example, any of us who may not be a VAT registrant goes into a business that charges VAT. Even if they give you a VAT invoice, that will always be treated as a VAT receipt. Simply for the fact at the end of the day, you can't claim VAT if you're not a VAT registrant. So if you go into a business and they give you an invoice or they give you a receipt, in this instance, it's interchangeable because why? You're not a VAT registrant. However, the minute you are doing business with them as another VAT registrant, what you require from them is everything you get from them has to be a VAT invoice and not a receipt so that you can actually claim your inputs. If you're doing business with another VAT registrant and all you get is VAT receipts, let me pull this up one more time. It's not valid for claiming input credit. So that means your business would be in a position where you may possibly be up to take a loss. So let's just take a look at an example. So with a VAT receipt, most likely a lot of the things are going to be the same, but you'll have the TIN of the seller. You won't have the buyer information being you actually, the customer, because I know for obviously you can take all our name and information just to put on a VAT receipt at the end of the day. The VAT will also still be shown. The title of the receipt will most likely, depending on the business, be a VAT receipt or will it say receipt, not a VAT invoice, and is meant just for general use. So if you go in the food store just to buy some snacks, some foods, some goods, whatever, but you're not a VAT registered business where you're doing direct business to business with this company, then most likely what they're going to issue to you will be a VAT receipt. Even if their system is set up where they are issuing to you, say in QuickBooks, where you're just still issuing invoices to a client. And that's something I want to explain quick. You can have an accounting-based system like we spoke about yesterday with the registration process, where you have basically the cash and the accrual. And we'll talk a little bit more about this when we do the filing aspect of it. What you want to make sure at the end of the day is that even if that business is issuing to you an invoice, and a VAT invoice, but you're not a registrant, that cannot be considered a VAT invoice for your business practices or your use. That would still be utilized as a receipt. However, for the protection of the consumer, we ask persons to make sure you indicate whether you're using a VAT invoice or a VAT receipt so that the person knows the difference. Most businesses may still utilize the invoice, and I'm making this clear because I don't need any of our people going to a client and rowing them and saying at the end of the day, you're giving me VAT invoices, but it's supposed to be VAT receipt. If you are not a VAT registrant, that does not affect you in the least. As long as they are charging you the correct VAT rate and as long as they are a registered VAT business. Now, if they're not registered and they charge you VAT, then we have a problem. Don't fight the people, get the police involved, please. So let's look at the difference between a VAT invoice and a VAT receipt. The purpose for a VAT invoice, of course, is to formally record a sale between two VAT registered businesses. The receipt is simply to provide proof of purchase to a customer, not necessarily a VAT registered person. It's issued, the VAT invoice is issued to registered businesses. The VAT receipt could be issued to anybody, any general consumer or non-registrant. The required information for the VAT invoice is the detailed information we went over before, including the seller and buyer's TIN, and it has to have both TINs. If one TIN is missing, that is not considered, just like I said, a VAT invoice. It will be declassified down to a VAT receipt. So that's why all of those details I listed is important for you when you're dealing with a client to make sure that they have all of that information on there. In addition to that, the basic information for the seller details may not be included for the buyer, but the seller details needs to be there, the total amount, and sometimes the VAT included. The VAT claim can be eligible for a VAT invoice. You cannot use a VAT receipt for a claim. The VAT invoice is also used in the monthly and the quarterly filings. When you're doing your VAT filing, you cannot include as a part of your VAT filing any VAT receipt. That does not count towards your VAT inputs and your VAT outputs at the end of the day. Now, for the receipt, like I said, it's not used for filing or claims. Pricing format, the VAT shown as a separate line, which is the VAT exclusive pricing for the VAT invoice, because you need to be able to differentiate not just the VAT rate, but which VAT rate, because that's also going to be determined which line the VAT actually goes on when you're doing your filing. So you don't put the 10% on the same VAT filing line as you do the 5%, and you don't put the 5% on the same VAT filing line as you do the zero rated items. All of those have a separate line because they are accounted for differently when you're actually filing for your VAT. The label in the header, if you're getting a VAT invoice, you want it to say VAT invoice and not VAT receipt. And when it's issued, a registrant sells another registrant, or if the refund eligible, that is why you need to have a VAT invoice versus a VAT receipt for sales under $50 or less. So who is each for? The VAT invoice, again, is for businesses registered for VAT. Entities eligible to claim refunds, example, diplomats, international organizations, and any buyer requesting an official invoice for VAT purposes. And the receipt is for any consumer, small buyers who are not registered for VAT, cash or over-the-counter transactions, and a simpler record of sale not usable for claiming VAT. Okay, so quick summary, only VAT invoices allow a buyer to claim input VAT. I know usually most of us go into a business in a store and we just gladly take whatever receipt for purchase at the end of the day. But this is why we're going through this, so persons can be aware. If you are a business doing business, and I would think that most persons that claim VAT hopefully would understand at this point that you have to have a VAT invoice and not a VAT receipt. And if you don't, this is why we're going through this. So both as a consumer and as a business, you have this in mind, that you don't go to a supplier and they just happen to give you any old invoice, but the details that you need on it for when you have to file are missing. Because you do have a right at the end of the day to request from the supplier that they give you a proper VAT invoice that has all of the information that's needed, because they need the same thing when they're filing. So that's why even with their type of accounting system, they should already have these things inbuilt, because they also need it for when they have to claim for their sales at the same time. And if a business issues a VAT invoice to a non-registered, it still collects VAT, but the buyer cannot claim. This goes back to what I said before. If you have a business that their system is just set up where they just give invoices, that's fine. It doesn't make a difference, because you as a non-registrant cannot claim that VAT at the end of the day. All that would act as in your place is just simply a receipt for business or purchase or sales of goods that you did with this particular business. All right. I know we started a little bit late, but I want to take a quick 10-minute break here. It is 2:30. Today's session, like I said, is probably not going to be too long, so we will probably most likely be finished at 3 o'clock either way. So I just want to take a quick break. It is 2:28, so we will start again at 2:40 and then finish through with the rest of the section. No echoing, right? Ready? Okay. Uh, huh? Just waiting for the catch up, right? Oh. Um, we have persons from GP inside there. Person from general processing, and they're assisting with the answer. Okay, and we are back. Thank you again for your patience. So I promise you today we will be done by 3, even though we started late today. We just want to make sure, yeah, we did this. Don't forget, like I said, one of the things is most of the things may be an hour to 2.5, depending on how in depth. You could only do so much with the invoice, but there are certain things you need to know about the components of the invoice, how it affects you as a VAT registrant, who can issue it at the end of the day, and how you use it to actually claim. Okay, so let me share my screen one more time. I truly appreciate our general processing team. Shout out to them because they is the best. The best. Okay. That's it. Play. Let me move this bar, which seems like it don't come out of my way. There we go. All right, so let's get back into it. So let's just look at some examples of invoices again. We basically went over the details, but let's just look at it again. So this is another example of an invoice that's set up, telling you it's a VAT invoice. It gives you the name of the company. It gives you the company's TIN. It gives you the company's address, gives you the company's phone number, so you can call them and tell them about all the wonderful things that they've done. I'll leave that right there. It gives you the name of the buyer. It gives you the buyer's TIN. It gives you the buyer's address. Then you have your invoice number, your unique invoice number, your invoice date, the date of the supply, because again, the date of the supply may be different than the date of the invoice at the end of the day, your payment terms, and then you come down and you see that you have the description of your goods, the unit price for the goods prior to the VAT. Then you have your VAT code, your VAT rate, and the VAT amount. Now, although we didn't mention the VAT code is very important, especially now how we have different rated items. And when we're going to look at a little further down, we're going to look at a mixed invoice to see how it affects you at the end of the day to make sure you're getting the right code. So I'm sure persons who are in the food store shopping right now want to be looking at their receipts to make sure that they're getting that 10% or the 5%, depending on what it is that they're purchasing. If you go and get some nice snack food for you, you want to make sure you get your 5% because you can consume it. But if you go and get your dog food, you can't snack on the dog food and say you want 5%, that's still 10%. Please don't argue with the cashiers. They only do a great job. Also included when you look down to the bottom, you see your subtotal exclusive of VAT, your total of VAT that you would actually be charged, and then the total payable. All of these details are important when you're looking at an invoice and a VAT invoice, because when you need to claim and you need to file these things, you need to make sure that the information is actually correct. Okay, so let's look at a not so compliant invoice. First thing you see is, see invoice, you ain't sure if it's a VAT invoice or whatever, you just see invoice. The name of the seller, what's missing? We're literally there next to it. What's missing? TIN number is missing for the seller. Then we get down to the buyer. You don't even have a buyer's name on it. You don't get no invoice number. You got an invoice date. You don't have no TIN for buyer. So at the end of the day, and the VAT is actually already included inside the price. You don't even see it differentiated. So would this be considered a VAT invoice? No. What would this be considered? A VAT receipt. You could not use this to claim any type of input because you don't have the proper details and information on this at the end of the day. So these are the things we need you to start thinking about when it comes to your filing, even when you're doing business, because who you purchase your sales and your stuff from also affects your business. If you go to a business, and we're not getting in any business, we're not suggesting who to buy from, who not to buy from. We just want you as a VAT registrant to consider the benefits for yourself being a registrant. If I go to a regular business that charges me $100 for the supplies that I buy from them at the end of the day, all I can do with that supply is basically pay my $100. That's the end of that. I go to a VAT registered supplier at the end of the day, and they charge me $100 and the VAT is inbuilt to that cost, then guess what? I can take that input from that and I can use that as a part of my input to deduct from my outputs. Versus once I then spend with somebody else who's not a VAT registrant, as a sales receipt, that's done and done. Okay, so let's look at real quick. So mix supplies on a single VAT invoice, why it matters. Some businesses sell more than one type of good or service on the same invoice. When these fall into different VAT categories, they must be clearly separated and properly coded to avoid misreporting or disallowed VAT claims. Now, this is especially important to us now. We do have sometimes throughout the year where we have a VAT holiday, like on school supplies and different things. So that's not a big issue because that's a zero rated item versus the stuff that you still be paying 10% for. But now we're operating in some instances where we're going to have 3 different rates. So during the VAT holiday, most likely you'll have items that are 0 rated, which you may have now. You have 10% rated items, and then you have 5% rated items. So you want to make sure that the invoice that you get is properly set up where you can actually see the invoice amount. So the type of supplies that can be mixed, you can have a standard rated 10%. This can be on things like furniture, electronics, paid services, a 0 rated, tax at 0%. And now for our standard rate, you have both the 10 and the 5% to actually consider. And then you may have exempt goods that aren't taxable and no input VAT can be allowed for those, like residential rent and educational services. So B, requirements when issuing a mixed VAT invoice, all line items must be listed separately. Each item must show the tax code, the VAT rate and the amount, and the correct subtotal for each type. Because then you want to make sure at the end of the day, when you're adding up your stuff, that it makes sense. Like people, like the young people like say, make it make sense. So let's just look at this one a quick sec. So you have your laptops that's charged at the regular 10%. You have marketing booklets that are 0%. And then you have tutoring service that's exempt. So when you see your invoice that's being charged for this particular service, you want to be able to see what the different items are, the unit cost for them, the total for them, what the code is that's being utilized with these things, and then the rate, and then the VAT amount, so that when you look to the bottom, even if it gives you a total VAT, the total VAT would be inclusive of all of the VAT together. But then what you'll be able to do when you look at the receipt is differentiate at what points these different things are at the end of the day, so that when you're filing, because all of this is really going to be important when you have to go and file. Because when you put your receipts together to do your VAT filing for your input and your output, you need to be able to say, okay, this is my total VAT for my 10%. This is my total VAT for my 5%. This is my total VAT for exempt items, which will have no VAT at all. And this is my VAT for 0 rated items, which will also be 0 rated. However, you still have to put a total in for the items that you actually may have purchased for your input for 0 rated. So that's something persons have to understand. 0 rated, and it's rated as 0 rated, must still be reported separately in the VAT return. 0 rated doesn't mean you put 0 on the line. It means whatever items that you purchased was 0 rated, that's what you put on that particular line for the VAT filing. And only taxable amount. So when we go through the VAT filing process, we'll go through the different lines to see what items need to be put on which lines at the end of the day when you're doing your filing. Some common errors you want to avoid: combining different types into a single line item, failing to apply the correct tax code, and charging VAT on exempt items, or omitting VAT on taxable items. My non-favorite but favorite part. So we've talked about some of these yesterday, but I just want to go over it again for persons who may not have been a part of yesterday's session. It is an offense for a non-registrant to issue a VAT invoice. If you are not registered for VAT, you cannot charge VAT. I don't know any different ways I need to say that. If you're not registered for VAT, you cannot charge VAT. A VAT registrant to not issue an invoice is also an offense. If you're dealing with somebody else who's registered for VAT and they ask you for a VAT invoice, you are required to provide that to that person. And some of the things that you can face is penalties, an unregistered or non-taxable person collecting VAT. Again, liable to $50,000, imprisonment, 2 years in jail, or both fine and imprisonment. I hope you notice for this, the prison years is longer than less than some of the other ones with the higher fines. An unregistered taxable that issues a VAT invoice, liable up to $250,000 could be fined, imprisonment up to 12 years, or both fine and imprisonment. A registrant that fails to state the price of a taxable supply inclusive of VAT, liable up to $100,000, imprisonment for 12 months, or both. Earlier inside the presentation, what we made sure we included was the link that if you do want to go and see some of the other charges, because we didn't go through all of them, that are there for you to have an understanding of what fines and penalties you can incur for different actions. So when a VAT invoice is missing, and this will most likely be our last section, and I think just section 10. So why it matters, of course, a missing invoice creates risks. Without it, you may lose the ability to claim input, and that can cost your business money. What to do if you haven't received a VAT invoice? The first one is contact the supplier immediately and just simply ask them if they could resend the invoice to you if you didn't get it, or if they sent it with error, to ask you to send them a corrected one. And give the supplier 14 days to respond. The supplier is legally obligated to issue the invoice within 14 days of your request. Document your efforts. If the supplier fails to provide the invoice, keep email copies. I like paper trail. I like paper trail. Keep email copies of letters showing you made a request. Record dates of communication attempt. Keep proof of payment, bank statements, receipt, delivery notes. This documentation may support a VAT claim under review even without a proper invoice. I would also say utilize our portal. Like I said yesterday, message us, let us also know what's going on. So we also have a record in our system of what's going on. Report unresponsive suppliers. If a supplier still doesn't issue a VAT invoice, report them to the comptroller of VAT. Provide copies of all the communication attempts, and the comptroller may follow up or impose a penalty on the non-compliant business. Like I said earlier, I know we have this thing in our country where people don't like snitch. If me not snitching gonna affect my riches, we have a problem. Can you still claim the VAT input? The possibility of that is only at the discretion of the comptroller. You must provide sufficient alternative documentation. You need to explain why the invoice is missing, and approval is not guaranteed, so it's always aimed to secure the proper invoice first. This is why I would always encourage you, if you're doing business with any company, first of all, make sure that they are a properly registered VAT registrant, because if they aren't, and they send you an invoice, and then you're looking for them and trying to figure out why the business disappeared with the one time. So you want to make sure do your due diligence to protect yourself as a consumer and as a business that's operating at the end of the day. And a practical example, ABC Construction buys supplies from XYZ Hardware, no invoice was given. ABC requests a proper invoice within 60 days, XYZ doesn't respond. ABC files a report and submits the payment receipt, delivery slip, copy of the follow-up emails, and the outcome. The controller may allow ABC still to claim the input VAT because they made their efforts. They documented what happened with their emails and their communications, as well as their receipt and their request. And notice it said a payment receipt, but it never said a VAT receipt, because even that still wouldn't be able to be utilized if the information is incorrect. It has to be a VAT invoice. So key tips, always review the supplier invoices immediately after purchase. If any information is missing, request a correction. Don't wait until it's time to file. The clock starts from the minute you actually did any type of business. Don't realize on the day of filing, oh, I don't have this invoice. So this is just something I want to mention that's going to be important to the next section. I'm not going to go too deep into this. What is a credit note? A credit note is issued by a VAT registered supplier to reduce the amount originally charged on a VAT invoice. Common reasons: the goods were returned by the buyer, a discount was agreed upon after the invoice, the original VAT invoice overstated the amount, or the services were canceled. The credit note must reference the original invoice if it is being adjusted. What is a debit note? A debit note is issued by a VAT registered supplier to increase the original charge from a VAT invoice. Common reasons for this: an error where the original amount was undercharged, additional goods or service delivered after the original invoice, a price revision or agreement to add charges post invoice. And these things are important to take note of, because at the end of the day, when you're dealing with your outputs and inputs, you want to make sure that the information and the supplies or the services you're being charged for are correct. And so just a couple of reminders. First of all, we always remind persons to please utilize our website, inlandrevenue.finance.gov.bs. We have all information on VAT, real property, business license, first home, and our other areas, condo tax as well on our site. But of course, anything pertaining to the laws and the amendments and stuff we upload here, as well as guides. Every guide that you can think of, from the invoicing guide to even the step-by-step guide for filing for VAT, we provide all of that information on our website. We remind persons for every session, please, when you have to make your VAT filing payments. The government itself has over 60-something accounts, and Inland Revenue has over 10 accounts. I sure somebody should say about 13 or so inside that, but I just want to make sure you understand you need to make sure you have the right banking information so that your funds hit the correct account. And when you're filing, please do not go to the bank the day of your filing, because that's not going to hit us until maybe 2-3 days later, which means you would have filed late, because we cannot account for funds that don't hit our account until it hits our account. And we encourage persons to monitor the portal, but also utilize the portal as a means of communication with us. So some key takeaways: one, a VAT invoice is a legal requirement as long as you are registered for VAT, as well as you can request a VAT invoice if you are also registered from another registered VAT person. VAT invoice must contain specific details to ensure that it's a VAT invoice and not considered a VAT receipt. A VAT invoice does not equal a VAT receipt, and vice versa. VAT invoices must match the filing data and be prepared to ensure accuracy to avoid audit flags or denied for audit VAT claims. Credit and debit notes are just invoices, and invoice compliance protects your business at the end of the day, which means better record keeping, fewer penalties, smoother audits, and always keep your issued and received VAT invoices for at least 5 years, which is why I suggest trying to keep everything digital or digitize it to make it easier for you to have access to and to share when it is actually needed. So for our upcoming module, which I'm excited about, we are going to go through the filing process, the VAT filing process, talking a little bit about the filing periods and deadlines, how to file a VAT return. We're going to do some calculations with the input and output VAT. We may actually do a game for it just to work through the process, get some hands-on work for it. We'll look at common filing mistakes, the difference between the flat rate and the regular filing, and then some practical examples and a filing simulation. So I want to thank you all for being a part of this training today. Is there any other questions, both in the room or online, before we close out? Ms. Hunt? I see some hands. Sorry, go ahead. No, never mind. Sir.
On the website, you have the full
For the most up-to-date and the amendment, it should be yes.
Why? I went down. Purchases.
Mhm.
$600. I didn't know that.
We're required to actually have those updated and available, so persons can actually do research their own. And as the amendments are made, we actually have to take those and upload them on the site. So you can actually go on the site, review it and download it if you need it at your own discretion.
I know they are coming to
Okay.
but I didn't know that.
We also do have the bill I think, already available on our site with the 5%. And the 72 something pages to look through for the different items that are actually listed. Notice I call the pages for a reason. I am not going through those 70 something pages. Any other questions?
Is the connection with the fact, or maybe by the point, right? But for instance, like myself, we put this before.
Mhm.
Our site, do we have to ask them to put all of this information?
No. That's an international business. That business would not equate to here. Where you would be able to claim your VAT would be basically when you're going through your customs and duty. However, if you notice now, Amazon also charges VAT for Bahamas, so you may likely be able to. But I'm just saying as an example, they are a business that actually charges Bahamas VAT when they do make purchases. So in those instances, that importer would be able to claim that VAT that they charge. But most international businesses, no, because they don't charge VAT under our jurisdiction where you can claim that VAT.
Okay, but I know that Amazon, if you have a US address and you send it to the US address, you will get that.
See,
If you send it directly to the Bahamas.
so you're trying to take money out of the government hands. I keep telling you, stop trying to get yourself locked up on live
No,
air, you
no,
know.
I'm just letting you know that when I put this,
I only joking with you, obviously.
when I put this stuff, I have a US address. I put it in. All right, my stuff still goes there. Now, if I change it to say send to the Bahamas, then you will take it back.
But we need that, we need, let me say it on behalf of, we need that little thing.
Okay.
We say in Bahamian terms, we're going on holiday.
No,
But if you're dealing with an international company, you can't claim VAT because they won't be able to. Yeah. You would be able to claim the customs receipt because you'd be charged on that, the input, the VAT from that, but not from the business itself direct. All right, any questions online? No? Can you send a link for the bank wire instructions for RBC? Okay, that is, I would say to that person that is directly on our site on inlandrevenue.finance.gov.bs. Honestly, once you just go right to the site and you click on that, oh, there you go. Some wonderful person dropped it inside there. Appreciate that. Okay, so if there are no other questions, thank you again for your time. We'll be continuing our sessions on Tuesday, and I want to close out the same way we always open. Father, I thank you for your grace and mercy. I thank you for everyone that's tuned into these sessions, those that are in the room. Protect them as they go into this long holiday weekend. Oh God, cover them on all sides. Let no weapon formed against them prosper. Keep them and bless them. And I pray the information they shared continues to help them. In Jesus' name we pray. Amen. Have a blessed and a wonderful weekend.